My name's Imogen Smith. I have organised this conference with Keoni and Shay, and thank you for the work. Especially Shay. Special shout out to thank you to Shay. Tremendous tireless work in pulling all this together. It would not have happened without her, and it would not be running anywhere near as smoothly, just left to Ian and myself. So, with that in mind, I am moderating this panel. So I'm going to have the panelists each introduce themselves and say a little about who they are and how they fit into the Hawaii investment system to accept what they do, and then we'll go from there. Go ahead. Yes.
Glynn, my kapu, Obao, Keoni Lee, my kamoku Oahu, Hi, my name is Keoni from the island of Oahu. Thank you for inviting me over to participate in this event. I am actually a sub on this panel for my board chair, Lisa Fleisner. Lisa's not just my board chair, but she's been a mentor of mine for the last 7 or 8 years through Hawaii Investment Ready. I went through the program as an entrepreneur, and she and her husband Charlie are kind of leaders in the impact space, especially the 100% impact space, and I've had the privilege and pleasure of being mentored by them for the last 7 years. So they convinced me to leave my social enterprise, OEVTV, and run Hawaii Investment Ready, which I've done for the last year now. And so I have big shoes to fill for Lisa, but hopefully I do my job.
Hi everybody, my name is Phil Glynn. I'm the president of Travois. We're based in Kansas City. We lend and invest to projects. We are also a development consultant that helps communities pull off residential and commercial developments. We also have an architecture firm. We've been around since 1995, and we brought $1.4 billion worth of investment to American Indian, Alaska Native, and Native Hawaiian communities. The projects that we've worked on here in the state have been an educational resource center in Waimanalo, a couple of workforce training and healthcare facilities in a place called Ahupua on the Big Island, and the renovation of the former Pauhana Inn, which is an old hotel in Molokai that's now the headquarters of Molokai Ohana Healthcare.
Hi, my name is Zlotnicka. Thank you for having me. I work with ValueAct Capital, which is a public equity investment firm based in San Francisco. The firm has been around since 2000, but I just joined 2 years ago. My background is in sustainable investing, and I joined 2 years ago to help start what's called the ValueAct Spring Fund. Spring Fund is named after Rachel Carson's Silent Spring, if you're familiar. And really the investment thesis is to use the same investment philosophy that the firm has had for 20 years, from very active and engaged, being active and engaged shareholders in public listed companies, but now applying it specifically to those companies that are solving environmental and social issues. In terms of our presence here in Hawaii, we about a little over a year and a half ago invested with Hawaii Electric, and over the course of the last 2 years have spent a lot of time in the community and with business leaders understanding the local ecosystem, and in particular the challenges around energy and climate policy. And I'll get more into it, but that's why I'm here today.
Okay, my name is Mike Frerichs. I'm the Illinois State Treasurer. I'm not sure how I fit into the Hawaii component of this, but I am. This is my first time to the state, and I'm under less than 24 hours here in the state. But in Illinois, I am the Chief Investment Officer, Chief Banker for the state of Illinois. We oversee about $30 billion in investments, about $13 billion in state funds, about $11 billion in college savings, and the pooled municipal funds, about another $6 billion. I think I'm probably here because we began to integrate ESG factors into our investments in Illinois. I think we've made great strides there. We've tried to encourage other states to take similar approaches. Before I came into office, we didn't really have an investment policy on ESG issues. We were not voting our proxies. We were not doing corporate engagements. There were a lot of things that we started doing, and we think it's gone so well, we decided that other public fund managers would do the same thing. And so we recently, last year, led an initiative to pass the Sustainable Investing Act in Illinois, mandates that all public fund managers ought to integrate ESG into their investment policies and shall consider other additional risk factors in addition to traditional models.
So we've talked a lot about ESG investment in this conference so far, and we thought it would be useful to take a moment and also sort of explore the concept of impact investing, which is similar but different. And it came up in the last panel, but we're going to start with sort of an impact primer for those who aren't necessarily familiar with the other world of impact investing. Yeah, go ahead.
So I currently run an organization called Moderator. We are a social enterprise accelerator. That was our core program, but now we're focused more broadly now on field building in the impact sector in Hawaii. We work with social enterprises on the demand side, investors and intermediaries on the supply side of capital. So we're really trying to create awareness and strengthening the field for the benefit through this impact ecosystem. My board chair, Lisa, was going to do this presentation. She goes, "No, Keoni, you can do it." And she's been an impact investor for 20 years, and so, I hope I can do this as much justice as she can. And I also want to warn you that I'm heavily caffeinated because I took the first flight over, so I'm going to go fast. I only got a few minutes because we want to honor everybody else's time on here, but we're going to go through it. And I look out into the room, and I know there's a lot of folks in here, who are in here, who are financial people, who work with investments, who do all these things. But I also see community members in here, right? And let's acknowledge it that the financial industry and the financial sector is exclusive. It's always been that way. And so I want to make sure that the folks in here who are from the community, who don't know about the financial sector as much, who some of these terms are going over their head, this is a chance for us to kind of get on the same page. And I'm going to go fast, and some of you who've been in ESG and all these things, you're probably familiar with these, and you guys are experts in the room, and we could argue about this and that of how things are defined, but this is just a general primer to get everybody in the room somewhere on the same page. So this is a impact continuum provided by Sonnen Capital. It's just a quick spectrum of the continuum. So like Neil mentioned earlier, he said barbell. He said grants on one side and private equity investments on the other. This is very similar. What happens as you move from left to right on this, from classic investing all the way to philanthropy, what's happening, the general thing that's happening here is intentionality. So with classic investing, the focus is purely on profit maximization, right? Zero care about anything else. As you move down the spectrum to responsible, then you start to bring in ESG, which it's being thrown around a lot here. The sustainable, thematic, impact first, and the philanthropy. Philanthropy is impact first, right? With almost no consideration for financial return. So that's the spectrum. So there's a return spectrum, right? There's an intentionality spectrum. So kind of on this half of the middle, so in the middle is kind of the impact space. Well, actually everything to the right of classic investing is impact space, but these ones in the middle, responsible and sustainable, if you think about the intentionality, it's do less harm or do no harm, right? That's the intentionality, but still very focused on financial return. Financial returns is still there, that's the primary, but it's also with the intentionality of do less harm and do no harm. As you move over to the other side of the screen, you go from intentionally doing less harm or doing no harm to intentionally doing good. And that's impact investing, where your intentionality leads with doing good. So thematic, impact first, and philanthropy definitely on that side. This is another way to look at it, broad impact versus deep impact. Broad impact, so when you look at things like ESG and all those things, it's like how a company does its business, right? this last slide, responsible investments and sustainable investments. They seek market rate returns, right? So let me give you a specific example. Like an example of that would be like a company's water and energy efficiency is rated and compared to its peers. So you're still dealing with the market rate returns, you're still dealing with those types of investments, but you're adding on a layer of intentionality. Versus deep impact is defined like not just how a company does what it does, but more specifically what a company does. So, you know, the broad side, you can see the compare and contrast between the two. I'm gonna move quickly. Charlie, Lisa's husband, just got back from Davos, the World Economic Forum, and he sent over this quote from Mark Benioff from Salesforce. Capitalism as we know it is dead. We're going to see a new kind of capitalism, and it won't be the Milton Friedman capitalism. That's just about making money. The new capitalism is that businesses are here to serve their shareholders, but also their stakeholders, their employees, customers, public schools, homeless on the planet. So, stakeholder capitalism, right? I think you guys are a very good example of that, right? And to put it into context of what we've been talking about here in this Ahupua type of thinking is relationships, accountability, reciprocity, understanding that you cannot work in silos anymore. And the way that I think Benioff is trying to pose this is that you're going to be able to create more long-term value if you start to look at it from a stakeholder perspective. So what it looks like in practice, stakeholder capitalism, fair wages, reduced CO to worker pay ratio, it's crazy. In the United States, 300 times I think is the average, the CEO makes over the average employee. Good customer service, investing in local communities, caring for the environment. Just Capital, a nonprofit research organization, defines stakeholder capitalism as an economy that works for all Americans by helping companies improve how they serve their stakeholders. Based upon their rating, can you guys take a guess who might be one of the best companies in the United States? I can tell you, Microsoft, NVIDIA, and Apple are the top three that rate against Just Capital's stakeholder capitalism. So just something to think about. I know it was really quick, and you can have these slides if you want, and I'm happy to talk about it more, but that's just a quick primer.
So, quick question, and then I want to move on to the other panelists. But and sorry to sort of spring this on you, but to tie this back to what we've been talking about, how do you see the sort of intersection between impact investing and Ahupua investment? Is it one and the same thing, or can they sort of inform one another?
I think it goes back to intentionality. So the intentionality behind impact investing is about doing good, and typically it's around equity, diversity, inclusion, regenerative, non-extractive. I mean, the philosophy and intentionality for individual investors are going to be different, but I think in a sense it's about collective well-being and improvement, which is similar to the Ahupua concept, right? You do not exist in isolation. You exist within an ecosystem of living things and other things, and that you are in relationship with those things constantly.
And so you think there's a level of intentionality that sort of impact brings to the conversation that ESG does not, and that this can help us think through these frameworks?
Well, that's a huge hole, like wormhole that we could go down. Yeah, ESG it's a good way to make change given the current system that we live in. And yeah, I mean, The reality is philanthropy and government money, impact capital, is 1/14 the size of the capital assets of everything else that's available. So if we're not playing with the 14 times where mainstream the market capital is, then we're not going to ever make change.
So Phil, can you talk a little bit about your experience investing here in Hawaii and how the Hawaiian values influence and impact those investments and how that might potentially be different even from working with indigenous communities elsewhere? Briefly, because we're on time constraint.
Sure. The first thing I should do is just acknowledge that of the little that I know about investing in Hawaii, it's only been about $50 million out of about $1.4 billion worth of work that our company has done in Native communities nationwide. But the little that I do know, I really learned from a couple of people who are based on Oahu. Tamer B. Fries, who's an education consultant and economic development person, and another guy named Bobby Hall, who's a former OHA and DHHL guy. Learned a lot from them following their lead. And really it's about recognizing that economic development is never successful if it's imposed from the outside. What you have to do is you have to come into a community, listen, be respectful, identify who the leaders are in that community, identify who the change agents are, support them as they rally their fellow community members around the vision, and then once the community is rallied around a vision, you get to a point where the only thing that's missing is money. That's where we come in. And so it's about investing in ideas that are indigenous, not just in the sense of indigenous identity of people, but really like indigenous to the community itself. I think another thing that I've learned from working here is that we need to just recognize this moment that we're in history. Economic inequality has a lot of really corrosive and terrible effects on our society, but we also need to recognize that it does create an opportunity because there is a lot of wealth that's in basically families and in foundations, which means that it's not locked up in the structures and systems of banking, which is highly regulated, which often makes it hard to do things like small business and affordable housing lending. And that's an opportunity, sort of like what Neil was saying about the death of monoculture on Maui. Now that things like the giant sugar industry are gone, that created a lot of destruction, but now that creates, I think the word you used was an open field. And I kind of feel the same way about the world of impact investing. We're in a moment now where, economic inequality is bad and we need to do the things that need to be done to address it, but we also need to recognize that it's created a generation's worth of wealth that can be deployed more quickly than old school bank lending could be.
So what needs to take place for that? Like, who needs to step up for that to happen? We've heard a lot today from the community saying, yes, we want capital, we want to work with investors under the right terms. What is it? What needs to happen to bring the investors in on the investor side?
Guarantors. So obviously none of this happens without great ideas, but we have a room full of great ideas here. And we have this wealth that is invested through vehicles like Travois has used, which are tax credits and other types of flexible investment tools. Also, I think a lot of family office dollars are out there. And I think that if the philanthropy community, or maybe it's even possible for some of the bigger institutions that are part of Hawaii to do, is just stop thinking just in terms of spending money, but thinking in terms of ways that these institutions could use their wealth to just stand behind projects and offer guarantees. Because if we could, $1 of guarantee could unlock $10 of investment from other places.
So, hedge funds aren't known for their philanthropic intent. So what is a hedge fund doing investing in Hawaii, or doing impact investing for that matter?
Yeah, great question. Well, with respect to the question on impact investing, and by the way, thank you for the quick overview, which I understand was in such a short time, but what our mission is with this fund is to prove that investing with environmental and social goals does not have a financial trade-off. And so we do have a very concentrated portfolio. We can't invest in every possible impact opportunity. We do have to be selective. But really the goal is to both generate return and those impacts. The reason that Hawaii and Hawaii Electric are so interesting to us are that we see here an example of where so much is so well aligned to achieve really just leading edge, pioneering environmental goals with respect to the state's 100% renewable goal by 2045, which I'm sure many of you know was the first state to do that. Now 10 or so states have followed. Also the fact that there is plentiful availability of not just solar and wind, because I think when people hear renewables, that's the only thing they really think of, but there are geothermal and other technologies available. They're actually rapidly evolving that are available here. And not only that, but again, as you all know, electricity rates are very high. And part of the reason that electricity rates are high is, yes, we are on an island in the middle of the ocean, far from other land where, elsewhere in the United States, utilities have the ability to interconnect, trade energy. You have these very disparate grids. There's also not even an underwater cable connecting the island. So each has to operate autonomously. So there are challenges, of course. But the fact is that today, there is 70% of the electricity is powered by oil, which is coming from places like India and the Middle East, where, of course, as you can imagine, it's very costly to ship here. And so the economics are such that there's actually, it's sort of an excellent solution that solves environmental, social, and economic problems. And that's really exciting to us. Which is not to say that it's easy and simple, as I said before. But the state and the utility are on an excellent path to achieve that. And so as active engaged shareholders, yes, we are a hedge fund. Although I will say that sort of in name only, we are a long-only fund, we don't short companies, we don't use derivatives. We actually really just fundamentally believe in rolling up our sleeves and just getting to work with companies. I'm also long-term investors, which and I realize that if you look at investment time horizons of things like pension funds and things like that, this is not going to sound long, but as far as typical public market investors, our average holding period historically has been about 5 years. I expect that in this fund it'll be longer. We have an investment which is 14 years and counting. So, we really truly see our role as enablers and a catalyst. We don't come ready-made the solution. I can't come and say, and I promise I have all the answers. I wish I did. But as was stated earlier, a lot of the solutions are already here. And really, we just want to be a supporter and contributor just with the background and resources that we have, which is having sat on 50 public company boards and having worked with a lot of companies. Actually, Microsoft was mentioned earlier. We were on the board of Microsoft through that transition over the last 7 or 8 years. And so we've seen a lot of that and want to bring that resource here because we just see this amazing opportunity again to prove this case. We can achieve that triple bottom line.
I'm a recovering hedge fund journalist, so I feel like I'm allowed to beat up on hedge funds.
Yeah, sure.
but how is, so 2 questions. One, did people warn you against investing in Hawaii? And how has the experience of investing in Hawaii been similar or different from what you expected from that in the US?
Yeah, great question. I wouldn't say we were flat out warned against it, thankfully, but I will say that there are certainly a lot of features to investing here that are unique. Part of which is, some of the more kind of technical aspects of, as I described, the fact that, the utility literally has physical constraints to deal with, and so, this is an isolated place and community in some sense, but there's sort of aspects of entering this culture, which we were somewhat warned about in the sense that we did recognize that you really do have to come and learn and meet people locally. I've spent more time here than I've probably spent visiting any other company that we've invested in.
I think that was just because it's like that.
Well, I mean, right? But I wish I could spend more time here, but it does take that investment and relationships were mentioned earlier. That's been hugely important. It's been a huge educational opportunity. So there's just a lot of time and effort and education that has to have taken place on our part, which we work sort of given notice on ahead of time. And we've been glad to spend the time because it's also helping to inform what we understand about these same challenges elsewhere. Because the fact is that, in my mind, when Hawaii can overcome all these obstacles and achieve the goals, obviously the 100% goal is amazing, but even goals long before that, Hawaii can be the shining star and role model for other utilities and others that are grappling with climate and energy policy challenges, across the country, around the world. So that's where, yes, there's that upfront investment and there's those challenges, but we see the payoff in a sense, and I mean that in all ways.
So joining the dots on that, is there a way in which, a hedge fund can apply our values elsewhere into other investments? Does it help inform your investment strategy and make you better investors as a company?
For sure, and one thing I didn't mention is that we've had a bit of a parallel experience actually investing in Japan, which is not surprising, of course, that there are similarities. About a little over a year ago, one of our partners was the first non-Japanese activist investor to be put on a Nikkei 225 board. And part of that was because of that time invested. And so in some ways, we already had that model a bit to learn from and coming here, but it's also been different. We've learned about how to approach Japan in what we spent time here, but also other places as well. I mean, I do think this kind of investing, I've been in sustainable investing for the last 10 plus years. My other colleagues have not necessarily. They've been in more traditional roles. And so I think, this type of investing just requires that kind of extra aspect, which does inform how we approach other companies. And I mean, for instance, when we go in to speak with companies, the traditional investor will, go to the investor relations person, and then meet with the CFO, and then meet the CEO. We actually start with the chief sustainability officer. We do that because we actually want to understand whether that is actually core to the mission and the strategy, the business strategy of the company. Because then when we're speaking with the CFO in the more common traditional conversations that investors are having, we'll be able to see whether those are actually consistent and being reflective of one another. Because if they're not, then that's a signal to us about kind of the authenticity of those strategies. So absolutely, I think those kind of are all informative for us.
Thank you, that's very good. So, Treasurer, you mentioned that you guys have invested successfully using ESG strategies. Can you speak a little bit more to that?
Sure. I was never warned against investing in Hawaii. But I was warned against investing in using ESG factors. So, your job as a chief investment officer, your job is to make money for the state. Don't push your liberal values on the state. And I think that Milton Friedman and maybe one of the two major political parties has played a large role in this in saying the only job of a corporation is to maximize return. I spent a lot of my time explaining to people why they think that's a bad thing. You can break it down to, because my guess is most people here are on board with this, but you may get pushback from others as well, and I try to explain to people, if you have a family, okay, your goal is to maximize your enjoyment. But if I tell my family members that we're going to go watch this sporting event, we're going to watch this on TV, we're going to have this for dinner because that's what brings me enjoyment, pretty soon you're going to find out your family members don't really enjoy you. And they're going to take out their frustrations on you. And that's actually counterintuitive to not pay attention to the other stakeholders in your family. That if you're talking about having a long-term sustainable family, constantly pursuing your enjoyment is detrimental to the long-term health of that family, and the same thing with corporations. If you're only looking at your shareholders, and you're not looking out for the interests of your employees, your customers, the communities you operate in, all of the shareholders, I think you're going to be short-lived. And in Illinois, I serve on a pension board. We oversee college savings funds, retirement funds. These are not groups where we look to the next quarter. We're not looking at your next quarterly earnings. That's great, but someone isn't going to retire, have their entire retirement in a 3-month window. And so we're encouraging people to do is to be long-term in their approach. And Neil was talking about some of the ideas of Ahupua, and you're looking towards the future. You're looking at systems. And that's what we encourage people to do. We want to be looking not just next quarter, but looking how is this company going to be sustainable 5, 10, 20 years down the road. And your systems are all those stakeholders coming together. And so that's been the real big thing we've had to deal with here in this office. The great thing, I came in and there was a transition. There was a transition from an elected official in Illinois, from a person in one party and switched to the other, and the governor's office flipped the other direction. So when I came in, I didn't have to fire people. If they didn't agree with me, they just left and went to go work for the governor, who was the same party as them. I got to bring in people who have a similar view as me, similar worldview. And it's great when you find people who are motivated by something similar. You give them a vision, you hopefully find the resources to execute it, and then they make you look really good. And then you get reelected. Great. So that's what I try and do here in this office. The biggest pushback I have is people saying, I could stop pushing my values. What I remind them is, we are pushing for value. I'm a fiduciary of these funds. My job is to maximize returns. But I see my job as to maximize returns for the long term, not for the short term. Does that answer your question?
It did, and actually you brought up something important that I wanted to talk about as well, which is this idea of fiduciary duty. So when you start talking about ESG and impact investments, a lot of the pushback that beneficiaries and others get is that this is not part of our fiduciary duty, and that our fiduciary duty is to maximize returns, and we will not be doing that if we do X, Y, and Z. So that has clearly not been your experience, but how do you, so particularly when you were seeking to pass statewide legislation, how do you push back meaningfully against those sort of fiduciary and legitimate concerns often, right?
Yeah.
So what is your...
Legitimate concerns. I can justify all of our business decisions as making companies more profitable and sustainable for the long term, and that is my job as a fiduciary. Last year, went to speak to a group of pension funds in Illinois. We have a lot of them. Recently consolidated a smaller number, but a lot of police and fire funds had a bunch of police officers and firefighters as their trustees. And when you see the letters ESG and you figure out what they stand for, that E scares a lot of people. Ooh, you're pushing your environmental issues here, which this is just about numbers and about making profit. And so I asked them by show of hands there, tell me, who believes that ESG factors are important things to study, important factors. Not many hands went up. I said, okay, so this is a bunch of police and firefighters. Who here has been involved or knows someone involved with opioids or an overdose? Almost all the hands go up. They're police and firefighters. I said, okay, so let's talk about a successful business model. Being a drug dealer, is that a good business model or a bad business model? I mean, in the short run, it's a great business model. You give people a product, they become addicted to it, and then they just buy, and buy. What a great business model. On your next quarterly report, you're going to show high profits, low costs. Great. However, is it a sustainable business model? And I would say, no, it's not. If you are selling actually illegal drugs, the police can arrest you and shut down your business. But let's say you're one of these legal drug dealers in lab coats who are pushing addictive opioids on people. But you're not worried about the police coming in and raiding you. But you have other risks involved. You have legal risks. And you're seeing this now. Purdue Pharma made a lot of money. Okay, how is that investment working out for their shareholders now? If they're bankruptcy. You have legislative risks. You have reputational risks. People don't like working with drug dealers. There are all kinds of risks out there. I say, so does that seem like a sustainable model? Is that something you want to invest in? And all these guys who said we shouldn't consider all these things shook their heads and nodded and said, yeah, that doesn't seem sustainable. I said, that's what ESG is. It's not just looking at a balance sheet. It's not just looking at profit and losses, but it's incorporating a lot of other factors that can make a company non-sustainable for the long run.
So what lessons, if you would say, give advice to the Hawaii if they want their institutions to, and again, the ERS is already integrating ESG to a certain degree. They do this, with our institutions do recognize that ESG is important, but if people want to see them do more, or they want to then sort of be more engaged in this process, what would you, if it's the arts legislation, what steps would you recommend? Or if the arts legislation, how to go about it?
If you're a hammer, you every problem is nail, or if you have a card throw, you every nail, you see it as a hammer. There's some phrase out there. You ask an elected official, what's the best way to go about this? Is elect people who see the world the same way. Get involved in the process. I mean, it's very easy to complain about some of these large hedge funds, present companies, these private equity firms, but you really don't have much say over their actions. The way you can change their behavior is you have large asset owners, hold them accountable. Now, if you're a member of a union, it's talking to your union and saying, hey, we don't want to invest in these things, but a lot of these really wealthy people, they don't care what you have to say. But you know what? When the state of Illinois invests in a company, you know what that makes us? It makes us a shareholder. It makes us an owner. We have some say in their company. And so you in Hawaii own a lot of different companies. And if your elected officials are willing to hold them accountable, you have a big say. And that's what we've done here in Illinois, is decided that we're going to step up and vote our proxies. We're going to engage with corporations. You know, before we reach the point of holding a press conference, we send letters. We make phone calls. We try and sit down and talk to them. The great thing about being an elected official is I have a microphone, really big microphone and a podium to stand on. There was one company we were pushing corporate board diversity on. We sent them letters, they had a homogenous board, we heard nothing. We put a phone call, couldn't get a phone call returned. We filed a shareholder resolution, and what do you suppose happened to our phone lines? Started ringing. Treasurer, why are you doing this? We'd be happy to engage with you. Well, that's great to hear. We've been trying for a while, but then eventually we told them, you have an all-white male board. We'd like you to have some diversity, gender, ethnic diversity. And they said, great, next time we have an open seat, we will have one of those. I said, why stop at one? But to their credit, they did appoint an African-American woman, so I guess they did kind of get 2 for 1. But then we continue to engage with them. It's very easy. We're going to talk about greenwashing or box checking. It's very easy just to say, show us you care about this, and show, yes, we do. But you have to continue to engage with them and make sure they're held accountable.
I get that's a great point. So we have under 5 minutes left. Does people have questions? Somebody over there has a question. You either have to shout very loudly or someone has to be your mic.
I have a pretty loud voice, everybody can hear me.
No.
I just had a question. I work for an environmental nonprofit, and one of the problems that we face in dealing with the landscape scale problems of all the industrial ag and how most of those fields have been abandoned and the legacy sediments left in our streams, and we don't even have any water in these streams. And so trying to tackle these huge problems, we're only given little grants here and there, right? So it's kind of putting little band-aids in various places. And this sounds like a tool that could be used to do a statewide kind of landscape scale restoration of our streams and our stream gulches and revegetating these areas. But my question is, if something like the idea of doing this to help save our coral reefs so there's not the sediments smothering them out, but then at the same time we also have climate change and the temperatures are warming. And so if we say that our end is to kind of protect these environments, but we can't bet against climate change and how that's going to impact them, would this be something that would still be a viable tool for us to use?
What do you mean by this? Are you talking about?
To use the investment, but I don't even know the right terms. I'm a biologist, so this is all foreign to me. But the investment bonds, I guess, is what it is. Yeah, because it's a long-term problem that we would, we're not going to have a healthy forest in 5 years. It's going to take a lot.
Stick around until tomorrow, but this is really an impact question. So can impact investment help with some of these much more challenging questions around how we save, protect, and preserve the environment.
So one of the words you hear a lot is return on investment. The other word that drives decision making is risk. So when you start to evaluate risk of not having water or not having a coral reef, then you get into a different kind of conversation. We can go into the weeds into that. I just want to point out one thing to kind of maybe wrap it up. This is a unique gathering. So when we talk about stakeholders and we talk about being in relationship, you have community in the room with investors and in government in the same room. So kudos to Ian and Schaefer for curating this group. But success is a two-way street. The investors have to come in, they have to learn, they have to build relationships in the community, they gotta really understand the context in which they're investing. But community also need to engage the investors. You need to come to them with solutions. We need to provide answers. We need to engage. We know the answers, especially like when we talk about it from a Hawaiian perspective. Encoded in our language and culture is our ancestral knowledge and practices that created a regenerative, thriving abundance here in these islands. We have IP that can help drive change globally. And we have to engage investors, corporations with solutions. We cannot continue to play, like we're talking about, that beneficiary mindset or those like we need charity. Like we have equal standing and we need to empower ourselves in that equation.
You actually answered the final question that I was going to ask, which was how we get disclosures if that is the title of this panel, but apparently it's time anyway. So, thank you everyone for